Ladies and gentlemen of the crypto space, we're live on a Friday, March 25th at 11:38 a.m. And as Dennis says, we're going to get a damn chart up today. Well said. The crossroads of financial systems. I mean, is it ever more clear that that's where this is? And we'll show it right in the charts of it's right here in the bond market, and the 10-year is right out on the long end of the curve, the short end of the long end, where it's the market talking. You know, the 2 months, 1 month, and those short duration T bills. That's for the financial system and the banking infrastructure, and that's much more affected by the Fed funds rate. But the long end is the public. It's the market speaking what's going on. This yield on the 10-year is extraordinary. It's not the yield because 2.471, and we've had higher yields historically, of course, but it's the trend. And if you go back further than this, because this chart is obviously limited, um, a trend violation to the upside, you're talking a 40-year history here. You're not talking about the trends that we look at on risk assets on Bitcoin and Ethereum. You're looking at a 5 minute, a 4 day, a daily. This is the monthly chart for going back to 1981, and let's look at it on the yearly. It's even more stark of where we are. Look at the slope of the 10 SMA. You know, the 10 SMA was only upward twice. This is the second time. It was upward previously in January of 18, which pretty much led into the Powell pivot at the end of the year, which led into September 2019 and the banking system failure. And now we're here again with an upward sloping 10, 10 SMA on the yearly. It's based on our recent history to the 80s. It's 41 years. This is the second time it's ever occurred. The stress in the financial system must be extraordinary. And you got folks everywhere talking about liquidity crises. And I've always said, you know, you follow Stephen and Jeff Snyder to understand when there's a liquidity crisis, it just takes everything out. So this is really the title of the stream. It's such an incredible crossroads of what's going to play out. If you have a liquidity crisis and the financial system falls apart, what do you have in America? All there is a financial system. Everything, especially the raw materials, is manufactured overseas, and we don't have the energy infrastructure to produce it domestically, to produce our energy needs domestically, meaning we have the energy. We certainly do. We've proven that we've been a larger exporter than importer. We've been basically self-sustaining for quite some time, but 2020 took a real big nip out of the energy production industry domestically. Um, and things like this take time to pivot, and there is no time. There's no time to repatriate, 50 years of supply chain export in months. This is going to take, 20, 30 time horizon type shit. There's no time to pivot all the contracts that are accepting energy sources from overseas to domestic sources. It's a massive supply chain restructuring and rearchitecture. And this happens over years and years. There's no radical pivot possible there. But what do you have here? You got the bond market speaking a story, screaming a story now, every day. Hey, it's up 100 and something basis points in a day, and it was at 2.5%. It breaches this white line, and that's going to be a story projected that'll span the planet. It's just, you know, you see 2.9%. And that's going to be the talk of the town, especially in macro financials. So, Dennis, there's a chart to start things off. Harjeet, good morning. Mike C. Uh, Check to make sure you're sharing. Yes, yeah, yeah. The charts are sharing. Raul, Malik, bond market could definitely do better. Yeah, the bond market's down big. I got some 10-year bonds. You got to hedge for the liquidity event. You got to hedge for the massive risk off. Everything goes to the downside, and that's exactly why we talk about optionality in your cash position, such that you can buy assets. And that's really probably where I'm at. You know, the skew of the portfolio. Do you have the vast majority risk off and not have exposure to assets and hope for the Buffett moment where you could buy assets super duper cheap? And that historically has played out well. Um, but you have the entire market saying they can't raise rates very much. They're never going to get to 3%. And balance sheet roll off is an absolute joke. How do you sell bonds into a market that's already selling bonds? It's going to drive yields on bonds through the roof, and it'll breach these trends. You open the door for my dog. Okay. So, hey Lois, stock market seems so ambivalent. It's is this directly correlated to the systemic uncertainty, a natural course of events versus the Fed's attempting to steer the ship? So what we have is the stock market and the bond market is calling bullshit on the Fed's capacity to raise rates. Um, and it's a showdown. We've had this showdown for the last 41 years, and every time these markets try to call bullshit, um, the bond market rallies and all the collateral is bought, and it gives the government the breathing room they need to be able to sell debt. If everyone's buying bonds, they could issue bonds, and they could means that's how you finance everything that we've done over the last how many decades. And if the market doesn't absorb the bonds and they're not, buying the long end of the curve, that is nicely compartmentalized into the phrase regime change, that there's a new regime in play, a new directionality of the markets, new flow of capital, so on and so forth, and it changes really everything. So that's where we're at a crossroads of financial systems, and then crypto being folded into the mix. He said, so many argue that the crypto space is merely a manifestation of shitty monetary policy of the federal government, and that while that may be true, it is certainly the case that technologically it's meaningful no matter what. Maybe it was a manifestation. Like, obviously, if the dollar crushes everything, then all you need is the dollar. But technologically, uh, what we play with, what we use in the crypto space, is got to be meaningful, even if the dollar was the super duper wrecking ball. And it may reemerge as the wrecking ball. We all know the risks of our portfolio balance, whether it's skewed towards stables or it's skewed towards assets. Um, but that's always on the table. It's always on the table, the capacity for this market to completely go straight down. And in that case, we wish we had more stables than assets such that we could buy assets as the market's going down and eventually rebounds. But maybe it's different this time, and that's the age-old question. The bond folks would laugh at that. Maybe it's different this time. Ha ha ha! Everyone buys bonds. They'll be forced to buy our debt. Well, that's clearly not the case, as what's been playing out between Russia, China, India, and Saudi Arabia. They've been striking some serious deals, and uh, folks that will you know lean towards hegemony reigning supreme of the U.S. dollar will say it's bullshit. They got nothing. They have nothing. We have our military and we have all these gold reserves, and the U.S. is the U.S. and there's nothing that could ever be done to disrupt the U.S. status quo. And I'm an American myself, and I want my country to do well, but I don't know. I think the dollar's a bit of a dick, and there's a lot of animosity, rightfully so, toward this system that forces people to buy bonds and forces people to buy the dollar. Otherwise, they lose the value of their sovereign fiat currency, because the dollar is the wrecking ball, and everyone needs to buy bonds to finance the U.S. deficit. And, it's just such overtones of spoiled, and U.S. is a dick. You can only imagine what these other countries think. It's quite disappointing to say the least. You want to be when you want to be doing honorable things. You don't want to be forcing people to use your currency, but that's in many regards what this currency does. It strong arms the entire planet. That's just not fair. I think we could do better. I always say that we can do better, but this damn financial system that they tweak old school levers, because that's how old it is. It's so analog. They seem to not think they could do better. All it is, oh, we're going to print some more bonds, or the stock market's like, we're going to wrap up some ETFs. Okay, here's a new ETF. It's just so fucking pathetic. It really is. Um, what does it mean these green candles hit the 10-year yield? Well, no, what you want to see is this trend. If this green candle right here on the monthly, there's nine, this is the yearly, if there's 9 months left in the year, if this breaches this white line, it's never in recent history breached that white line. And if you go over to the monthly, it's never breached the 200 SMA, and then this one up here is the 200 EMA. It's never even touched the 200 EMA. So if he had a breach of the 200 SMA or the EMA or that white line, oh, that's going to be the talk of the town right there. It's never breached the 200 SMA. If you get a full clean breach of the 200 SMA pushing towards the 200 EMA, close. We've never seen anything like that before. Extraordinary. Dennis, Jaeger, rates up, higher mortgage. Oh my God! So the mortgage rates are through the roof. So there's big fears of a housing crisis. If all of a sudden people stop buying homes, what happens to all the home builders, and what happens to all their debt, and what happens to ARMs, adjustable rate mortgages, and it's just there's crises brewing everywhere. It really is extraordinary. So how do you raise rates? How do you raise interest rates at the Fed funds level, and with mortgage rates doing what they're doing, and the bond market yields? I, if they raise rates and this rips up, literally you're talking about regime change. That it's just really extraordinary where we're at, and scary also, truthfully. Booster, Captain, your thoughts on Stargate? Stargate's a big deal. I Technologically, we've talked about it. Tokenomics are in its infancy. There's nothing to the tokenomics right now. Um, yeah, there's been a nice dip. That's a nice dip from 358 to 283. Uh, I uh, I had a nice position. I'm out of my position. I actually sold this top right here about no, I sold here 280. I sold right around here. Well, now it's turning previous resistance into potentially support. We'll see if this falls through. But that's okay. I bought some bond at 70 cents, and I don't need to have it right now, and that's fine. I allocate capital to tokenomics, not just technology. It's not just the narrative. You can have the best fucking narrative in the world, but if the tokenomics don't have a trade balance where there's more capital flowing in than capital flowing out, it's just not something I'm interested in at the moment. Um, so this is an inflationary asset right now. All there is emissions. There's no VE, there's no locking positions, there's nothing that is sucking circulating supply out of the market. It's just more and more in circulation. So right now you're in adoption greater than inflation mode. And that's fine. There's plenty of protocols that have done well in adoption greater than inflation mode. But that's something I don't need exposure to in these markets. I look forward to the tokenomics pivot, and I think it's going to take some time to build out a tokenomics, and I'm more than happy to help them with it. Um, I think folks over at Badger and myself are going to help Stargate with their tokenomics. So I'll be participating on the governance forum. I think the technology of cross-chain messaging, I mean, it's the biggest narrative I have in my playbook. That's my original 2021 narrative, seamless cross-chain interoperability. And there's only two protocols in the entire crypto space that have anything remotely aligned with that narrative. And Stargate really hits the nail on the head. It's a profound technology in that regard. And the other one is catalog finance and Ren, which is old. And I very much look forward to 2022 in this regard. Very interesting. Um, the rise has been insane, but I've been burnt by Solid during the first week's pump to 15, and we all know what happened since then. Yeah, Solidly was a big dumpster fire, unfortunately. Speaking of Solid, did you see Andre has bought a huge bag of CVX recently? And guess what as to what he's up to. Well, I still think Solidly has legs. I think it's meaningful technology. I think his tokenomics is flawed, and that's a similar situation we find ourselves in with a lot of assets. We have great technology, great software, but tokenomics that needs adjustment and iteration. And what is tokenomics? It's monetary policy. What does the Fed do? It modifies monetary policy. Okay, so pivot to their monetary policy. So there's a lot of potential for technologies with decent tokenomics to pivot the shit out of their monetary policy to do really incredible things. And that's really the most important thing when allocating capital. It's not just the narrative. It's not just the technology. Folks go on YouTube streams and they're like, narrative investing. This this system is going to change everything. Yeah, but if there's more, if it's inflating, it's going to be depreciating. So I look forward to this stabilizing. I hope it appreciates more. I think it deserves more. I think the technology is profound. I don't have exposure to it at the moment, and that's okay. Ethereum has been ripping. It punched through the 200 EMA briefly on the daily. Let's see what it does. It's finding support on the 100 SMA on the daily, which is nice to see. Hard to correlate a daily chart with the shorter time frames, but let's see. You got a 3077 for the daily 100 SMA, give or take, which has some nice support. 3000. So okay, so you got long-term moving averages in the short time frames with some nice support. You want to see it keep going up on the longer time frame. I want to see it hold support on the 100 SMA on the daily. I want to see it breach that 200 SMA, and I want to see it push towards. My color schemes are all messed up. Pretty sure it's the 200 EMA. No, this is the 200. This is the 200 EMA. This is the 200 SMA up here. 3,500. It needs to breach for the 200 SMA. Tom's in the house. How are you, my friend? It's a pleasure. Happy hour. I know it's Dogfish Head. Woo! What a heck of a spectacular beer that is. Liv W's in the house. Pleasure. Booster Stargate. If you are in profit, be sure to take profit. Big money is holding on. Yep. It's not easy. Like, look, I you could have liquidated at a buck 50 and it ripped to 360. So I don't have answers when to buy and sell. No one does. Anyone thinks they do, they have no idea. You're talking about placing your capital in front of moving capital flow. So think of it as a room, and you want to be in the room before 10,000 people are about to come into the room. And, if otherwise the doors only fit so many people getting through the room, and it's a whole shit show. So let's say, like a movie theater. Like a movie theater, you want to be the first out of the damn movie theater, so you don't have to wait. And you want to get out of there usually like a minute before the movie ends, so you beat the crowd. That's capital allocation. That's literally these markets. That's the stock market. It's all of it. That's the analogy that's there. You want to beat the crowd. You want to be there first. So you want to be first in, first out, and then it's the right side of the trade. That's what it translates to. Risky crypto morning cap, a pleasure. Don't forget how many corporations bought up houses. It's pretty scary. It's very scary. BlackRock was doing a lot of buying. But what are you going to do? The most important thing probably to do is to own a property at this point, which is not so easy. The property prices have appreciated significantly. Bitcoin on the daily above the 100 SMA, above the TWAP, which is nice to see. TWAP pushing through the 50 SMA as well as the 10 SMA buried behind there. 200 SMAs above head, 4,800. That'd be a heck of a breach. I think JT on Twitter would be like, whoa. 45.98 for the 50 SMA on the weekly. The fact that we're above the TWAP on the weekly is good to see. That's nicely reassuring. Um, I'm not going to do a correlation between the 50 SMA and the shorter time horizons right now, but a breach above this 50 SMA would be really encouraging. That we could see significant appreciation. Look, anytime it rips above the 50 SMA, you get these legs. Albeit it fell through here, but it held support on the TWAP. But anything above the 50 SMA has the potential for some nice upside appreciation. I mean, look back here in March of 2020 was the breach of the TWAP, the 50 SMA, rip, break, support, rip, 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 and then it failed. But that's over a year later. This was a 1 year long bull run, March to May. So, I talk to folks and I say, why are you playing this bear market when you could just wait for this bull market? Well, you don't know when this type of bullishness will start, but a breach of the 50 SMA would be a nice time for that to start. Why? Because that's what it's done historically. So I often encourage folks to wait to buy higher, and that has to do with confluence and confirmation. You wait for confluence, you're going to have a much higher likelihood of it continuing to go up versus going up and then coming down. So you're going to make less money, and that's kind of that Twitter poll I did the other day. What do you do in certain markets? Do you make no money? Do you take a risk to make a lot of money, or do you make less money? And do you make less money more comfortably and more predictably? And that's usually the side that I always lean towards, making less money more comfortably, more predictably. Got to always be able to sleep well at night. Um, this is not a risk-taking channel. You guys know that by now. Uh, Ptolemy, what about Chainlink CCIP? That's interesting stuff. I don't think their tokenomics is something that interests me much. I don't think Chainlink's tokenomics ever interested me much. It reminds me of like MakerDAO tokenomics. It just doesn't have the spice. It doesn't have the flavor that I'm interested in. It has tokenomics, but and obviously it's profound technology. This is a perfect example of narrative. Uh, Thus far, Chainlink investing has been fully just narrative investing. What are you investing in? I mean, it's clearly not appreciating. Link USD, Coinbase. Clearly been on a heck of a depreciative trend from $50 to $15. I mean, the, you're talking, what's his name? Chico Crypto did very well, very early in on Link, but from that's a big loss. Chart actually looks good. There should be some good entries. I don't know. It doesn't pique my fancy. Like it's critical infrastructure, that's the narrative. But I'm more interested in capital flow rather than service technology. Like the potential for Stargate to generate transaction fee revenue is meaningful. Like, fine, staking, Link, but I would need to know more. I would need to feel more comfortable with staking Link. I would need to know that the nodes are getting a decent amount of revenue, have a potential to get a decent amount of revenue. And I just don't see that right now. Maybe I should do more due diligence. Maybe there's something to a node that would be interesting. Anyway, Killis, good morning. Bu, heyo. Considering doing a video about the Eurodollar market, Noah? No, I don't have enough experience to speak entirely about the Eurodollar market. That's just follow Jeff Snyder in that regard. That boy really knows what the heck he's talking about. Dennis, GLP is essentially a stablecoin with 45% farming on Arbitrum. GLP is cool. It's relatively stable. It's going to be tied to the PNL of the protocol, so it's going to have some volatility to the upside and downside, but it generates a very meaningful revenue stream. I mean, 45% on a couple $1 million is nothing to sneeze about. Now, here's the complexity. If you're running around with $5,000, $10,000 in the crypto space, 45% of the money doesn't really do much. And I'd rather, I at my portfolio size lean to holding assets like Ethereum and Bitcoin. Portfolio is relatively concentrated right about now, sitting on a fair amount of stable still. Um, but I leaned into Badger a bit. The Badger, well, Citadel is what's catching my fancy, but Badger will be the workhorse of Citadel. So I really think there's a lot of synergies going on around here. So I got a nice boost going on with Badger, max boost on some Bitcoin. I have a Bitcoin position. What the heck's going on? I got a little the frenzy mode with a large Badger position. Do I really? Wow. Well, Badger's up huge. Wow. Fair amount of Badger. Fair amount of Badger. I think I'm quite interested in what's going to happen with Citadel when it gets launched in probably a month or two. It has the capacity to be the convex to Badger's curve, for instance. So that piques my fancy. 40 people in the stream, 10 likes. I know it's a bear market, boys and girls, but damn, we can do a little bit better. Let's go over two more charts and we'll wrap it up for today. The good old classics, curve and convex. It's good to see curve obviously breaking from its falling wedge. It's below its guppies on the weekly. It's below a very historic, meaningful level of resistance, and that has proven as resistance. Look where it is. You see the green line. It's in the purple box, so it's above it, a support, a very historic support. Listen, there was a time when if you were here and it was $2 for curve, and you're like, it's never going to get above $2, it's now finding $2 as a cheap price because there's people buying at $2. So that's a resistance flip support in many regards. So this is a very long time horizon chart, meaning it didn't hold above the $2 here. So between January 18, 21 and June of 21, this is a failed breakout attempt. So that's a half a year of failed breakout. But these are the time horizons people need to think in. And then it failed the breakout and turned previous brief support into resistance, and then it finally broke out again. But so this is basically a failed breakout above right about here, $2.35. So all of this, unfortunately, the way my mind thinks, I think of all of this, that was irrational exuberance. So as of right now, the fair price point, as you can see, for curve is about $2 where it is, where it's holding as resistance, $2.35. This is actually a very interesting price point. Look at all this price action and all this time spent because it failed. It broke above $2.35, failed, resistance, broke out, failed. Eventually, $2.35 is going to turn into a discount. That's going to be the cheap price, and that's kind of where it is. The fact that it was being bought at a low of $1.87, much higher low than the capitulation in summer of 21. These are good signs, and maybe it'll finally break out from 235. Now that's a hard thing for folks to swallow because we had obviously irrational exuberance up to $6.70, but its fair price point that it has yet to break out with from this historic trend is right around here, $2.35. It needs to flip it and turn it into support. Now, bear in mind, you can also maybe consider, because of such volatility, you could maybe consider this as support. If it breaks out here, this could maybe be considered support at 235 in some regards. I know it's a dip below it, but it has overtones of that. Anyway, so let's look at convex. Convex has been doing very well today and yesterday and the day before. It's a heck of a break up to $25. What I love to see is the RSI on the weekly. Look at that directionality compared to the signal. And MACD is flipping around as well. It's starting to come down. Obviously, we don't have a trend at all. It's on the weekly. We don't have enough history for the chart to have a trend. Um, but there is a higher low on the daily. That's nice to see. And I would love to see it get above that white line. That is a decent trend right there. So all of this, folks play these crypto assets and don't realize how irrational they are. Look at all this shit. All of this. That's just nothing. It means nothing. That's just froth. People throwing capital in where they have no idea what they're doing. It's just irrational exuberance. Imagine if you got rid of this, all this extreme volatility, and you just looked at a chart that's, I wish I had a way to cover it. Can I do that? Rectangle? Maybe. Maybe. Black? No, that doesn't work. Okay, so the point is, this could be ignored in my mind, and we never broke out from this white trend line. So it's the same thing I was just talking about with regard to curve. So CVX has never been above $25. Albeit it was, but that's the point. The point is to peer through the madness and to see these assets for what they are. And it was a failed breakout attempt above $25. It See, resistance, broke out, support, sure, but eventually it failed. So it is a resetting that never having broken out of this price point line to right about here, about $25. So let's see. This market, where are we with regard to these breakouts? Is it bullishness? It certainly is market actors calling bullshit on the Fed. The Fed, the only way to manage inflation is to crush demand, which means you got to make people poor. So they stop buying shit. But we're getting into territory with macro financials where making people poor is kind of going to induce social instability. It's going to erode social cohesion. This is not 1929. This is a different population. This is a population that's a result of great financialization. I mean, look what's going on with social media. Look at the mentality of the adolescents, my generation and younger. I'm the oldest of the millennials. I'm 39. Um, they're not prepared. I don't think they could stomach it. I don't think they could handle it mentally. So we're just a very precarious time where traditional monetary policy isn't going to work on this type of population. I don't. I don't think. I don't think the public can handle the stock market imploding, tens of thousands of businesses going bankrupt. Boarded up stores on every block in every major city, everywhere. Businesses are just gone. It's just going to be devastating. And that's really the bullshit that the markets are calling on the federal government. That if the people can't handle that, would the federal government allow that? And how can we handle it with regard to maintaining social stability? Police force is already overwhelmed. Very complicated situation, honestly. Let's wrap it up. Let me answer the remaining questions. Barry's in the house. A pleasure. Brady Niels. Hello, nerds. Yes, we are. Bu, if the market's nuke, what do you expect the bull market could return to crypto? So this is not a bull market right now. The rate cycle is dead. The business cycle is dead. The only thing that remains is the Fed intervention cycle. So the reason the markets are doing what they're doing is because they're pricing in intervention. They're pricing in rate cuts. That's crazy. You've seen a couple of folks talk about the markets are pricing in rate cuts in like 2024. And that's why the markets are up. They don't think the Fed is going to be able to raise rates much. And even if they raise to like 2% that's shit. There's nothing. These rates mean absolutely nothing in the grand scheme of things. Volcker had to print to like 13, 15% in order to get inflation under control. But the markets don't think that's possible. And that's being said. That is being said by the bond market. They won't be able to get in all the rate cuts they want. Maybe seven. The bond market's pricing 6 or 7, and the stock market's pricing in 4. You're talking about 25, 50 basis point rate hikes when Volcker did 13, 15%. This is crazy talk. We're going to be back to rate cuts and fiscal stimulus before anyone could blink an eye. The market can't handle a deflationary implosion in this day and age with this population. And that's the big question. Do you call the Fed's bluff? Because historically, it's always been wrong. Don't fight the Fed. But maybe this time is different. Everyone always thinks this time is different. But there's a lot of reasons to think this time is different for legitimate reasons. Thank you, One Curious View. I wish you a good weekend as well. Got those mini pools going? No, I did not. I abandoned my rocket pool interest. I'm probably going to set up a light sale instance on Amazon. It's relatively cheap. And I'll run like a Geth node, so I can have at least my own node. So in MetaMask, and by the way, MetaMask is done. Don't use MetaMask is done. Frame is crazy. Frame, frame. This thing is crazy. This is so much better that you can inject as MetaMask. It does the same thing as MetaMask, except it's better than MetaMask. This is the craziest wallet I've ever used, and obviously it works with Ledger. So I mean, seriously, MetaMask is done. It is so sluggish and laggy. There's absolutely no reason to use MetaMask at all with Frame doing what it does. That's crazy. All right, I wish you all a wonderful weekend. 12:13 p.m. on a Friday, March 25th. 5th. Thank you for joining. Tell everyone to subscribe. After party on Discord. We got the most rational crew in the entire crypto space. If you're not on Discord, you're missing out on rationality. If anyone needs me, I'm available at noahseidman.com. More than happy to help with a little one-on-one as time permits. See you guys on the flip side on Monday.